Procter & Gamble is not the kind of stock that usually attracts attention through hype, fast momentum, or aggressive speculation. And that is exactly why this chart deserves a closer look right now. TG is the type of name the market often treats differently. It belongs to a more defensive part of the market, and that changes the way technical setups should be read. When a stock like this begins to react from a meaningful support area, the focus is not on excitement. The focus is on structure, stability, and whether buyers are beginning to rebuild control from a lower risk zone. Looking at the daily chart, a buy signal appeared on March 26 near 142.7. In the 3-day chart, an earlier signal showed up on March 20 near 144.2. That sequencing matters because it suggests the larger timeframe started identifying value before the shorter timeframe began confirming a more immediate reaction. When two timeframes begin to align like that, it often tells us the market is attempting to stabilize rather than simply producing a random bounce. The main zone to watch now is 138.5 to 141.5. This is the core area of interest on the chart. It is the zone where support needs to hold if the current setup is going to remain constructive. In technical terms, this is where buyers need to prove that the recent weakness is being absorbed rather than extended. If price continues to behave well inside or above this region, then the chart starts to support the idea of a recovery phase rather than a deeper breakdown. That is especially important in a stock like PG. This is not a high beta growth name where price can swing wildly on sentiment alone. PG tends to move in a more controlled way, and that means technical recovery often develops through a process rather than through explosive momentum. In other words, for a stock like this, constructive behavior matters more than dramatic behavior. The daily signal at 142.7 gives us a near-term point of interest, while the 3-day signal at 144.2 adds higher timeframe context. The fact that both signals are relatively close to the current structure increases the relevance of this setup. It tells us that buyers are not trying to react from a random location. They are responding from a zone where support and positioning may begin to matter more. If this recovery continues, then the next important upside area is 151 to 158. This should be viewed as the primary recovery zone. That range is important because it represents the first major test of whether this rebound has enough strength to move beyond stabilization and into a more convincing recovery phase. If price pushes into that region, the conversation changes from support holding to recovery quality. But that does not mean the stock automatically becomes strong the moment it reaches that level. In fact, 151 to 158 is also where price may encounter resistance, hesitation, or profit-taking. So from a technical perspective, that area is not just a target. It is also a decision zone. If PG can recover into that region and remain stable, then the chart improves meaningfully. If it gets rejected there, then the move may still be classified as a rebound inside a broader range rather than a true trend shift. On the downside, the key risk management zone is 136.5 to 137.5. This is where the setup begins to weaken materially. If price breaks below that band after entry, then the original thesis loses quality. At that point, risk control becomes more important than expectation. And that is one of the biggest differences between disciplined market analysis and emotional trading. A good setup is never just about upside. It also has to define where the idea no longer works. So the clean technical map for PG looks like this. The 3-day chart showed an earlier signal near 144.2. The daily chart confirmed interest near 142.7. The main support and decision zone is 138.5 to 141.5. The next recovery zone is 151 to 158, and the risk area that matters most is 136.5 to 137.5. This is not a momentum-chasing setup. It is a structure-based setup in a more defensive stock, and that is what makes it interesting. TG does not need to become exciting to become constructive. It only needs to hold support, recover with discipline, and prove that buyers are regaining control one step at a time. For now, this is a stock sitting at an area where patience, structure, and risk management matter far more than noise.